Beckman from Central Valley Ag is our grain market analyst this week. The USDA Tuesday released its February crop report. It lowered corn ending stocks by 50 million bushels and dropped soybean ending stocks by 25 million bushels. The agency made adjustments in South America, adding 1 million metric tons to Argentina and subtracting the same amount in Brazil. That takes Argentine production to 56 million metric tons and Brazil's output to 94.5 million. We talked with Luke Thursday morning and began by asking for some key takeaways from February's supply and demand numbers.
February WASDE typically, Jeff, is not too exciting. I mean, you're coming off of having supply numbers finalized, so to speak, in January. We've got planting intentions coming up in March, so February is kind of that middle ground. Didn't expect much, really. It was demand revisions for corn and beans, and then really probably looking at South American production. In this report, we did see ethanol climb 75 million bushels, citing higher gasoline consumption from EIA data. Then we did pull back feed demand on the balance sheet by 25 million bushels, with distillers kind of displacing corn in the ration, which might be a little suspect based on conversations with some feeders in the area. But overall, we do tighten carryout on corn, 50 million bushels. Good to see those numbers safely under 2 billion, which was kind of our benchmark number for quite a while. Soybeans, you're going to see exports grow for the 4th month in a row. Since our October numbers came out, we've seen exports climb by 3% on the balance sheet. So carryout numbers coming down for beans too. We did see imports climb, which was a little bit of a head scratcher, and then we did see crush come up 15 million as well. So overall, corn and bean carryouts both shrinking a little bit in the February numbers.
Are those soybean exports hanging in here as Brazil gets ready to start shipping out its beans?
Really, they have been, and typically you get into that December time period, you start to talk about, well, the South American crop's coming, our export program's going to crash, and really it's been extended maybe a little longer than we thought. And if you look at crush margins, Jeff, down in South America, they're making money in the crush business down there. So as those beans come out of the field, a lot of those early beans are going to crush demand instead of into the export channels. You don't have the amount of ships down in the port facilities like you did a year ago, so maybe not quite as hungry for the South American beans, and you've seen U.S. export sales remain, for the most part, pretty strong. Seasonally, this is really from here forward where those start to slow down. But sales have been good. Shipments still been pretty aggressive.
Let's talk about ethanol. So as you mentioned, they increased its usage by 75 million bushels, corn usage. Is that surprising to you, or do you think that ethanol is still profitable, or at least could be profitable, and is an engine that can keep going?
Well, it's an industry that if you look at spot margins, you know, we buy the corn, we sell the ethanol, we sell it to distillers. The numbers are negative today. Now, plants are going to be hedged differently depending on how they protect themselves, but overall you've seen local demand for corn start to dissipate a little bit. And that is because the ethanol industry is experiencing some tighter margins. So the number was surprising to see the USDA maybe be as aggressive as they were with that number, but we have been grinding at a pretty good clip during that first quarter, and I think that has set us up for a good year. And so if you look at what do we need to do each week to hit the new number, it's still possible. It's a number that we're grinding at today. We'll see kind of where the stocks go. The stocks numbers continue to grow. They're following crude oil stocks higher, which crude stocks are the highest they've been in quite some time. So,
what are some targets for maybe old crop corn and soybeans that you think a price level that could be attractive for some sales?
Sure. You know, you're looking at some moving average resistance right in that 393, 392, which is kind of a double top just in the last couple weeks here. It's a level that we have not breached. So 392 if you need to get some stuff moving. Otherwise, you know, we feel comfortable if you do have some stuff sold. Let's see a 4 on the board. One thing we really want to talk about on old crop corn right now specifically, though, is basis. What will basis do should corn climb to 4? Because that seems to be the magic number for a lot of people. So really talking about offsetting your basis risk and managing that, independently of what the Board of Trade's doing.
Soybeans?
Soybeans, you know, they're a little bit tougher. Nobody has anything good to say about beans right now. But it is February, and we're trying to remind ourselves of that and stay a little bit patient. But I think if you could get a 10 in front of beans on the Board of Trade, that's a number that we probably need to let some more beans go at. You know, and if they climb a little bit north of there, 10, 15, 10 and a quarter. But if it has a 10 in front, we'd like to take advantage.
Whether it's nationally or locally, what is your sense of what the planting acres will look like as we get ready for spring?
Early on, it was all about beans growing another 4 million acres up to 88. We had corn at 88. We felt like you know, corn was going to grow from there. That number feels too low. I think the U.S. producer is good at growing corn. They like it. And if you look at break-evens today with where new crop bean prices are at, it's kind of a tough play, at least, you know, in our neck of the woods it is. So that ratio, it's the smallest it's been in a while at 2.3. I think that corn's going to steal some acres, and you're going to see a number closer to 89, 90. Beans fall to maybe 86, 87, somewhere in there.